Fresh off the unprecedented S&P downgrade of the nation's creditworthiness, the rating agency said it will evaluate local governments. David Johnson's a partner at Chicago-based ACM Partners, a boutique financial firm that advises struggling municipalities. He joins us from Chicago. David, welcome to Bottom Line. Thanks for coming on.
Thanks so much.
David, cities and towns that were already in trouble, should they be even more concerned now? How's that downgrade going to affect how local governments pay bills? And could we see some localities forced to raise taxes?
I absolutely think it is going to impact how cities and towns manage their finances. I think what you're going to see is the most troubled municipalities throughout the country are going to, within the next 6 months, get a rating that makes more sense on a risk-adjusted basis. I think S&P and the other ratings agencies have over the years failed to acknowledge that municipalities and all local government, their main role is not to make good on their financial obligations. Their main role is to provide services.
Yes.
I think that we're starting to get to that pain point where many municipalities are going to have to start making a choice whether they provide key services to their constituents or make good on their financial obligations.
David, given the U.S. economic outlook, what are the chances of widespread mid-year budget cuts this fiscal year?
I expect significant budget cuts, and I expect that with the gyrations in the credit market, it is going to be that much harder for municipalities to go back and paper over their structural deficits with additional debt financing. At the end of the day, they're going to have to get their houses in order, and I think the market gyrations right now are just going to force that to happen sooner rather than later.
David, Detroit and other cities who are already rated as junk, will that S&P downgrade push them over the edge?
I think what it does is it wakes up the fixed income community to the fact that municipalities, just like any other debtor, can come to a point in which they just can't pay anymore. Too many times, fixed income investors over the last year have cited how few Chapter 11 municipal financings that there have been. They're starting to wake up to the fact that you can be a fixed income investor in the municipal side and take a real haircut, as the Jefferson County debt holders are just finding out.
David, this is a very important topic. I wish we had more time, but if possible, can we have you back in the near future to continue the discussion?
I would love to be on to talk more about this. I think this is a crucial issue going forward.
I do as well. David Johnson, a partner at Chicago-based ACM Partners, joining us. David, thanks so much.